Ladies and gentlemen, good day and welcome to DEEPAK NITRITE Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Tiwari from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Tanvi. Good afternoon, everyone, and thank you for joining us on DEEPAK NITRITE second quarter and first half FY21 earnings call. Today we have with us Mr. Maulik Mehta, Executive Director and CEO, Mr. Sanjay Upadhyay, Director of Finance and CFO, and Mr. Somsekhar Nanda, Deputy CFO with us. We will begin the call with opening remarks from the management, followed by interactive question and answer session. At the outset, I would like to clarify that certain statements made or discussed on the call today may be forward-looking in nature, and a disclaimer to this effect has been included in the investors' communication shared with you earlier. To begin, Mr. Mehta will share with us the operating performance and growth plans of the company, followed by Mr. Upadhyay, who shall be taking us through the financial and segmental performance. And I will now hand over the call to Mr. Mehta for his opening comments. Thank you, and over to you, sir.
Good day, everybody, and thank you for taking the time to participate in the earnings call. I hope all of you and your families are safe and in good health and are being very contrite about taking opportunities to meet each other during the festival season. I trust you will have had the opportunity to run through the earnings documents which were shared earlier. Before we take your questions, we'd like to share some perspectives on the performance during the quarter. I'm sure that you have noted that DEEPAK NITRITE has embarked on its Golden Jubilee year. We're celebrating 50 years since our incorporation in 1970, and it will be our endeavor to maintain the high standards of corporate governance, adhere to the 3 P's of sustainable growth, people, planet, and profit in that order, and sustain the focus on value creation for all stakeholders in the years and decades to come. We're pleased to be in a position to set new benchmarks in performance as we commemorate this milestone. Our people-first philosophy has driven all plants to work efficient locations while very strictly adhering to government directives and regulations. Our EHS team and plant teams have recognized that a restrictive manufacturing environment may lead to unintended errors, and thus we have been very vigilant and proactive in ensuring human, equipment, and material safety. During quarter 2, DEEPAK NITRITE delivered a strong recovery on a quarter-to-quarter basis, capitalizing on the ability to manage its plant operations for more days. There has been a strengthening in various segments as we go along when it comes to production and the supply chain. In addition to this, we have also actively evaluated and pursued opportunities across domestic and export markets to enable this revival, both in terms of production and in terms of maintaining value. Recording double-digit growth at all our strategic business units has been a demonstration of this. On a consolidated basis, revenues were 991 crores in quarter 2 compared to 1011 crores last year in the same quarter. I would say that this is a fairly remarkable achievement if we are to take into account the operational constraints that we experienced in this quarter, combined with the fact that last year we had an exceptional realization in one of our segments, performance products, and these have been normalized as expected and anticipated. So a credible performance in quarter 2 by DEEPAK NITRITE, even when some engines were not firing as they were last year. Consolidated EBITDA was at 280 crores in the quarter as compared to 250 crores in the previous year, higher by 8.1% on a year-on-year basis. This was significantly propelled by the phenolics business, which allowed the company to report high growth in its consolidated EBITDA. On a consolidated basis, PAT was 170 crores as against 150 crores last year, higher by 13.3%. Reporting growth in profit after tax in Q2 has been a hard-fought achievement for which I would like to acknowledge the contribution of the entire team of both companies. On a standalone basis, revenues were 448 crores in Q2, higher by 26% compared to Q1, a quarter where we operated just for about 2 months or maybe a little less. On a year-on-year basis, Q2 revenues were lower by 22%. Operating conditions in Q2 last year did not have the same constraints as we have had this year to peak production, and therefore there is also a higher base effect due to the exceptionally high realizations of performance products as I originally mentioned. We reported an EBITDA of 139 crores in Q2 FY21 against 102 crores in the previous quarter, registering a 36% growth. EBITDA margin has improved by 230 points to 31.1% in Q2 compared to Q1, which was due to the operating leverage as we operated not only for more days, but slowly and surely we gained more confidence across the board from our agrochemicals, pharmaceuticals, and care chemical segment products. Standalone profit for Q2 was 124 crore, higher by 46% compared to Q1, lifted by effective cash conversion recovery programs and a current position as a debt-free company on a standalone basis. Standalone PAT for Q2 was 92 crores, higher by 45% on the previous quarter. DNL has sustained an attractive margin profile and has retained customer stickiness as expected. In the global chemical supply chain, Deepak Nitrite continues to take advantage of potential developments. As for a global China Plus One strategy, where de-emphasizing of the supply chain dependence on China and re-emphasizing on strategic partners in other locations, including India, has remained a high priority at the strategic level of many multinational companies. Deepak has been able to leverage its extensive business experience, business leadership position in several products, and a process competency to be able to be an attractive target for many of these discussions. We believe that the drive to diversify and de-risk supply chains shall rapidly accelerate despite the ongoing pandemic. Moving to performance of Deepak Phenolics, on a sequential quarter basis, revenues increased by 64% from the last quarter, 334 crores in the last quarter to 549 crores in this quarter. EBITDA has also moved up by 63% in line with the increase in volumes and revenues. And this has rebounded significantly on the operating constraints from the last quarter. The nimbleness displayed by the team to address the export market while the domestic market remained constrained in Q2 has allowed us to manufacture at a very high utilization, on an average even higher than 100%. The EBITDA margin in the phenolics business was stable at 25% in Q2 as compared to Q1. Operating leverage combined with reduced interest cost has enabled us to more than double our profit and PAT compared to the previous quarter. On a year-on-year basis, we delivered sharply. 26% improvement in revenues and 229% growth in EBITDA. Operating leverage, lower feedstock prices, as well as isopropyl alcohol, which came into commissioning in April this year, added to an increase in EBITDA margin, which is now at 25%. sharply higher from last year's 9.6%. Solid realizations from all of the products, but particularly acetone and IPA, aided the performance, and we responded to the slower domestic demand by quintupling our exports in the quarter compared to the previous year. And despite this, we have ensured that not only has capacity utilization remained peak, but we have managed all sorts of logistic challenges with a joint effort of marketing, production, and the logistics teams. In a key development, the company has incorporated a wholly owned subsidiary named DEEPAK NITRITE Limited. The subsidiary will carry out the business of manufacturing chemical intermediates that have similar process competencies to ones that the company already has, and have also further developed some new ones to add to its kitty. In conclusion, let me highlight that DEEPAK NITRITE is very well suited for numerous end user segments, and with its tailored and enticing product portfolios and deep process expertise, remains an attractive option for multinational companies looking to depend on companies like DEEPAK. The roadmap for the near term appears promising as we incorporate new downstreams and value-added product offerings, while also strengthening our existing platform of resources. This will improve the operational efficiency along with gains from our forthcoming brownfield expansion ventures and position us well to increase market share where we are already present. With this, I would like to hand over the call to our Director of Finance and CFO, Mr. Sanjay Upadhyay, to address the forum briefly.
Thank you.
This is the operator. We are not able to hear the management line now.
Is it okay now?
Yes, now we are able to hear you. Thank you.
Thank you, Maulik. Good afternoon, everyone, and warm welcome to DEEPAK NITRITE's Q2 and H1 FY21 earnings call. I'll take you through the financial highlights for the quarter ended 30th September 2020. On a standalone basis, total revenues for the quarter declined by 22% to 448 crores as compared to 572 crores in Q2 FY20. In H1 FY21, it was lower by 29% to 803 crores as compared to 1126 crores in the same period last year. On a standalone operation, staggered improvement from lockdown and social distancing policies, customized utilization levels on a year-on-year basis. Taking this into account, revenues would have still been in line. One must remember these results must read these results in view of it's a 5 months operation as compared to 6 months last year. In Q2 FY21, standalone EBITDA was lower at 139 crores as against 216 crores reported in the corresponding quarter of the last year. EBITDA margin was 31% in Q2 this year compared to 37% in Q2 of the last year. In H1 FY21, EBITDA declined by 40% to 242 crores as against 404 crores in the same period of last year. The EBITDA margin was 30% in H1 FY21 compared to 36% reported in H1 previous year. Profit after tax for the quarter stood at 92 crores as against 179 crores in Q2 FY20. Depreciation for the quarter was at 14 crores, while the finance cost declined by 88% to 1 crore in Q2 FY21. On a standalone basis, domestic revenue stood at 230 crores in Q2 FY21 as against 348 crores in the corresponding period last year. Due to the pivot towards exports market which were recovering ahead of India at the domestic recovery, we witnessed a moderation in domestic revenues which were partly impacted by constraints to the peak production. Export revenues came at 218 crores in Q2 FY21 compared to 224 crores in Q2 FY20. We gave greater emphasis on key exporting countries which are on the road to recovery from virus effect. During the quarter under review, consolidated turnover stood at 991 crores in Q2 FY21 compared to 1011 crores in Q2 FY20. For H1 FY21, revenues are 1,672 crores compared to 2,074 crores in H1 FY20. Since DPL achieved higher volumes in the capacity utilization for more than 100%, the deficit in standalone revenues have been noticeably recovered in the consolidated revenues. EBITDA stood at 280 crores in Q2 FY21 compared to 258 crores in Q2 FY20, higher by 8% on year-on-year basis. In H1 FY21, EBITDA was 468 crores compared to 524 crores in H1 FY20. PAT at 170 crores in Q2 FY21 compared to 150 crores in Q2 FY20, higher by 13%. In H1 FY21, PAT was 269 crores as against 282 crores in FY20. In Q2, coming to segmental performance in Q2 FY21, revenues from basic chemicals stood at 166 crores as against 236 crores in Q2 FY20. While sector margins were aided by low petrochemical prices, top line suffered because of slow pickup in the end-use segments such as textile, oil, fuel additives, and also due to temporary supply disruptions. This segment contributed 17% to total consolidated revenue. EBIT stood at 41 crores with EBIT margin of 24.6%. In the final specialty segment, the revenues came at 210 crores in Q2 FY21, growing by 52% on year-on-year. This segment delivered a stellar performance, although capacity utilization was impacted by COVID-19 linked government restrictions. Performance guided by robust demand scenario in some of the key end user segments which contribution margins also improved. Final special segment contributed 21% to total revenues. On an EBIT 102 crores, EBIT margin expanded to 48.6%. The performance product segment revenue stood at 73 crores in Q2 FY21, registering a subdued performance. Decline in revenue year mainly due to stabilization of last year's usually high base realization as well as the slower recovery in end-use industries. Having said that, demand is gradually recovering and we expect to reach pre-COVID level by next year. Let me again repeat that personal product prices have significantly declined over last year, which is clearly evident in PP segment revenue. While the prices still remain below normal level, we expect the trend to positively improve in the ensuing quarters. Performance segment has contributed 7% to total consolidated revenues, with EBIT came at 5 crores in EBIT margin of 6.7% compared during the quarter under review. Moving to phenolics segment performance in Q2 FY21, revenues increased by 26% on year-on-year basis to 546 crores, with EBIT of 122 crores translating to strong EBIT margin of 22%. Lastly, on the balance sheet front, between March and September, we have generated nearly 500 crores of net cash flow from operations compared to 765 crores generated in full financial year 2019-20. This has been primarily deployed towards reducing the borrowing while also continuing investment towards the capex. As a result, we have improved debt to equity ratio on a standalone basis to, in fact, it is almost 0.02 as on 30th September. Standalone equity is balance sheet is today debt free as on today. On consolidated basis, the debt equity ratio is it has come down from 0.69 on 31st March 2020 to 0.37 presently. The financial position of the company is stable and enjoys a very healthy liquidity position with cash, liquid investments and bank balances improved and consolidated basis despite the loan prepayments of more than 100 crores. Loan repayments and capex incurred as stated above, that also is a part of this. Let me add a key development here. CRISIL Limited upgraded the long-term outlook of the Deepak Nitrite from Enclosed facility from CRISIL AA- stable to CRISIL AA- positive and has reaffirmed the short-term ratings as CRISIL A1+. With that, I would now request the moderator to open the forum for question and answer session.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Sajal Kapoor from Unseen Risk Advisors. Please go ahead.
Yeah, thanks for taking my question. Have been a shareholder for over 4 years now, and must congratulate the entire management team for their potent strategy backed by a flawless execution. And so hearty congratulations on that front. I have a two-part question. So in the last con call, Maulik, you alluded to this network effect playing out in the Indian chemical industry over a period. So in that context, how do you see the landscape for Deepak in terms of partnering with MNCs for long-term custom synthesis? So that's one. And secondly, within pharma intermediates, are we looking at both GMP and non-GMP intermediates or purely non-GMP at this stage? Reason I ask this question is because the economics and the regulatory oversight is very different for GMP and non-GMP intermediates. Thank you.
Okay. First of all, thank you for the questions. The last time I alluded to the network effect, I remain a very strong believer in that. And I believe that this comes from two aspects. One is India and the other is Deepak. Now, India, as it has its own strengths when it comes to manufacturing capability, when it comes to IP rights and things like that. And it also has a very large domestic consumption in any case. But network effect, what I meant is that as more and more companies worldwide start looking at India as a manufacturing base, chemical as an industry is an industry where once there is a base put here, adding newer and newer opportunities on top of that, specialties, allows the base industry and the growth industry both to capitalize on the synergy with each other. And therefore, as India becomes a country which is in pole position for attracting new investments from these multinationals, over a period of time, this growth will only accelerate, the attractiveness will only accelerate. I believe that in a certain way, Deepak Nitrite is a microcosm of the same. We have a very healthy mix of large volume basic chemicals, which also become the foundation for a lot of specialty chemicals and process expertise. And many of these companies worldwide, and by the way, may I also mention many of these companies worldwide also includes Chinese companies that are looking at increasing exports. Many of them look at companies which have strong backward integration and strong process expertise instead of fly-by-night operators. Deepak is very well positioned here because one, it has demonstrated a committed performance over the last 50 years. Two, it has a very wide portfolio. Three, it is financially stable. And four, it is backed by a strong management team. Because of all of these, I believe that Deepak and India both should be very attractive for new opportunities moving forward. Now, when you come to pharma, predominantly what we would look at is at the end of the day, why should Deepak manufacture something? Is there a process expertise? Is there a downstream synergy? Is there a customer synergy? So we always look at new products, whether it is in pharma or agro and any other segment with this lens. And then we look at making those investments. So therefore, we will learn to walk before we learn to run, and we will focus on pharma intermediates which have a good one or two steps away from our current expertise and our current product portfolio. If you ask whether this is GMP or non-GMP, as I mentioned, our focus will first be to walk before we run. I hope that answers your question.
Yeah, sure, Maulik. It does. So just on that custom synthesis part, are we sort of actively looking at partnering opportunities for all sorts of specialty chemicals or other chemicals with these partners? Because the reason is when we do custom synthesis, our margins are better, the entry barriers are higher, and it gives us a more sustainable sort of a revenue and cash flow stream.
So we did start looking. What has happened over the last year or so is whatever we were looking, others have been looking at us a little bit more than we were looking out. And therefore, there seems to have been a good meeting of minds of companies that are looking at Deepak actively and Deepak looking at opportunities actively. It's too early to go into details, but I think that you will find moving forward that not only are we not averse to it, but we understand the attractiveness and we understand why the customer looks at Deepak as a promising opportunity. So you will see more clarity on this moving forward. These discussions are not at a stage where we are able to talk about them openly.
But we are open to this thought. I mean, we are not averse of taking, if at all a good opportunity comes, certainly, why not?
Sure. No, thank you so much for that detailed response. Much appreciated, and all the very best.
Thank you.
Thank you. Participants, we requested to restrict to 2 questions in the first round. Should you have any further questions, you may come back in the queue. The next question is from the line of Levin Shah from ValueQuest Investment Advisors. Please go ahead.
Yeah, thanks for the opportunity, sir. My first question is on this fine and specialty chemical division. So, like in the last quarter, you had spoken about it that we have seen a very good performance backed by pharma and agro. If you can just throw some light, what exactly has changed for us in this segment that we are seeing increased revenues and also margins have gone up substantially, and how do we see sustenance of this kind of growth and even like on the margins going forward?
Okay. So in the fine and specialty chemicals business, what we have are very sticky customers where the entry barrier is quite high because one, it requires a deep process expertise, and the other is it requires sustainable supply and confidence about meeting that quality day in and day out. So the margins have been high in recent times, largely because of significant investments that we made for improvement of process competencies, and also because customers have over a period of time decided to depend on Deepak more perhaps than they did a few years ago, and they have also been benefiting from that because instead of looking at Deepak as only a tactical supplier, when they're looking at Deepak as a strategic supplier, we have been able to meet their demands when it comes to quality, when it comes to sustainability. And also we must keep in mind that last year there was a lot of concern when it came to environmental regulations, because of which there were costs built up. Right now you're seeing margins because we've been able to optimize on our production processes. We expect that this will remain sustainable in the short to medium term. These are strategic customers, let me re-emphasize.
And sir, this will be like from pharma and agro customers itself, right? From those segments itself.
There's a diversity, but yes, there is a significant influence of pharma, of agro, and of care chemicals.
So when you talk of fine and specialty margin, I would rather add one thing that the margins have significantly gone up, no doubt, because of, as Maulik rightly explained, is because of process competencies, so it is going to stay. And there can be some impact of the prices suddenly going up, but that is not, in this case, I would always suggest that you take a range. Today you are seeing a margins of this, but as a sustainable margin, I would still suggest you take between say 40 to 44%. That would be a fairly sustainable assumption. Okay, in the short term and in the long term also, but then it has gone up, no doubt on that, and here to stay.
Got it, sir. Sir, and my second question is on this new wholly owned subsidiary that we have incorporated, Deepak Cleantech Limited. So if you can throw some more light on this, that is this regarding some new chain of chemicals that we are getting into, or it is just a separate subsidiary so that we can take advantage of the tax benefit, or basically it's a whole new stream of business that we are looking out for under this subsidiary?
See, this subsidiary, of course, we will tell you more about that when we announce certain projects, but the whole idea is it's not only tax alone here. It's a mix of everything, but the product range or the product, whatever it will be a known chemistry. We are not going to venture into something which is unknown. So there is no doubt on that. Okay. But if you remember, we had acquired a piece of land last year and there were definite plans, but plans were certainly put on hold temporarily because of COVID situation. Now we have reworked and we are coming out with our plans and we'll make the announcement at an appropriate time. But it is a known chemistry, known processes, and not unknown processes. Maulik, if you want to add.
Absolutely, what Mr. Upadhyay said. I will just add one point here, that the products that we are looking at investing into, again, internally we take a very hard line to ask a very simple question: why should Deepak be the company to make them? The products that we are looking at have a very strong, convincing case, and therefore the investments that we will be talking about over a period of time, the products that we will get into will have a very strong synergy with Deepak's current platforms, current customer sets, and new platforms, where we continue to believe that Deepak will be the best manufacturer of these products.
Okay. But sir, the product...
Sorry to interrupt, sir. Sorry to interrupt, sir. Sir, we would... Sir, we'll have to move on to the next. I'm sorry about that. You may come back in the queue. Thank you. Participants, in interest of time, we would request you to restrict to one question. The next question is from the line of Swarnabh Mukherjee from Edelweiss. Please go ahead.
Right. Thanks for the opportunity. And good afternoon, sir. Congrats on a good set of numbers. So, sir, my first question is on Deepak Phenolics. If you could throw some light on, of the three products, what are the trends that you are seeing, and which one is contributing to the improvement in margin profile at this point of time?
See, Deepak Phenolics performance, first of all, you must be happy with the Deepak Phenolics performance, right? Now, the point is, the calculations were made 2 years back, and every time I used to say that don't go by crack, whatever is in the market, and it's a mix of everything. Like we have come out with IPA. In fact, first quarter IPA was doing significantly well. Now IPA market is, now the prices are getting gradually normalized. So it is just not one product where I can say that yes, this has done well or that has done. It is a mix of everything. It is phenol has also done well, acetone is also doing well, and IPA is also doing well. So it's a combination of all these. And on top of it, we are running, as Maulik said in opening remark, we are running our plant at 100% capacity. I mean, this is something which is remarkable. In the current situation, if we find that there are imports and we are exporting the product and achieving our efficiencies. So it's a mix of everything. The production levels are high. We are able to sell the product and the combination of the product mix. So, I mean, that's what it is paying here. It cannot be just IPA or just acetone or just phenol. No. So I think we should not get into one product, and anyway, people are having that impression it's just because of IPA. No, it's not that.
In fact, IPA has had a negligible impact in Q2. I would like to add one point to what Mr. Upadhyay has said. The DPL result, I would say that an overwhelming part of it has been because of how efficiently they have manufactured and moved the material. It has not been any individual product that has contributed more than normally to it. The markets for all of these products are not yet recovered in the domestic segment. And in the export market, it is at the export prices where there are even larger players. So what you are seeing is a performance that is largely delivered by operational excellence.
Okay, got it, sir. So in phenolics, are we also continuing with the exports?
Of course.
We have increased it by 5 times compared to last year. In fact, we have increased it from the first quarter. And therefore, until the domestic market is back to where it was pre-COVID, as you will notice, there is always an impetus to export more because the loss is if you manufacture less.
Right. Got it. And one quick follow-up on previous participants' questions. So in the finance specialty segment, I just wanted to clarify that, apart from the improvement in the operational processes that you have mentioned, is there any new products also that you have come up with that might also be aiding the performance?
We've come up with differentiation in existing products, but that is based on the customer's requirement. New products will be introduced in the coming few periods.
Okay. All right. That's very helpful. Thank you so much, sir, and congrats again on the great set of numbers.
Yeah, thank you.
Thank you very much.
Thank you. The next question is from the line of Nirav Jimodia from Anvil Research. Please go ahead.
Good morning, sir, and congratulations on the excellent set of numbers.
Yeah,
so my question is related to the previous participant only. So, sir, just want to understand more on our R&D part. So, whether our R&D is more focused on process innovation or the product innovation. So, like you mentioned that it's more of a process innovation which has really helped us in our last few periods in terms of reducing our cost of production. But even if you can just explain us that whatever turnover or the margin accretion what we have seen in the finance specialty chemical segment is some products might have also been introduced in last 2-3 years. So if you can just elaborate more on this, that what are the size of these products? So can each of the product can be an opportunity between 50 to 100 crores of size or something like that? If you can just help us with respect
I would caution from extrapolating so much.
Yeah.
I can just say that in our R&D, or I will say technology department, we have a team that focuses on product development and we have a team that focuses on process intensification.
Correct.
A lot of what you are seeing is a result of value coming in from both the teams.
Correct.
And you will continue to see this in the future.
Correct. And sir, one more thing related to this is like, what can be our differentiator factor in terms of EHS? Like I was reading your annual report where you mentioned that we have been undergoing hazard and operability study before any project is undertaken. So if you can help us understanding more on this, that would be very helpful.
I think this is, frankly speaking, something that I believe that any good, responsible company should do it. It's a matter of shame that it seems to be, one of the defining features of what Deepak is doing. It should not be unique to Deepak. It should be by all the chemical companies. But it is seeming to be something that is not shared by all manufacturers. Nonetheless, HAZOP studies and process safety studies, environmental safety studies are regular parts of any new product development. Correct. And we continuously engage our internal team in looking at how we can constantly improve our existing processes, which anyways are as per whatever government regulations and standards. But our goal is always to keep on improving our water footprint, improving our effluent footprint.
Correct.
This we believe is something that we need to do for future generations. So this is part of our values. We believe that it should be part of the values of any chemical manufacturer.
Okay. Thanks a lot for the answer, sir, and all the very best.
Thank you.
Thank you. The next question is from the line of Pratik Agarwal from ASK Investments. Please go ahead.
Yeah. Hi, everybody. I have a short question. The government is putting a lot of emphasis on, Make in India kind of initiatives and are extending PLI schemes for electronics, and the next is supposedly chemicals. Does Deepak expect to benefit from such a policy? Or the other thing that we have seen the government do is higher import duty protection in quite a few products. So, does all of this benefit Deepak in any manner?
See, we are working on a few ideas for, somebody asked about Deepak Clean Tech. So some products which are, we were already working on that, but incidentally, if we are getting that PLI under that, no harm in doing that. So we will be certainly benefited because of that. But we have not changed our track to just see that PLI scheme there is a benefit, so let's go ahead with that product. So that is certainly not there. But yes, there are ideas where we are actually we can take advantage of PLI provided we put that project. So no doubt on that. And this Make in India, in fact, we were the first, when we started phenol manufacturing. And our whole emphasis is to see that we manufacture products which are import substitute, which helps the government as well as the country and company also. So this anti-dumping and this, of course, it comes. If it comes fine. But we don't depend on anti-dumping duties to, like people will ask phenol and this. In fact, we have answered so many times in the last 3-4 years that what happens if anti-dumping is withdrawn and what happens. So we do not calculate our numbers based on anti-dumping duties. It is just purely on operational excellence based on the demand supply here in India, and not the anti-dumping. If it comes, it's yes. Otherwise, we are not that much dependent on any of the product on anti-dumping.
Sure. Thank you.
I think one thing that I will add here is Mr. Upadhyay mentioned phenol, but we've been saying Atmanirbhar since 1970. So
that's been our way of doing business, that I understand.
Yeah. But also I want to add one more point. Look, anti-dumping duty, PLI scheme, all of these things, they all have a time frame. Now, if Deepak looks at manufacturing something just to take advantage of a time frame, without asking whether it will be sustainable after that time frame, that is not the kind of business that we are in. We are not here to be fly-by-night operators to take advantage of some scheme or something. We will take up products and opportunities because they make sense regardless of any short-term benefit. And that is how you will see us choose our products in the future. If there's a PLI scheme, if there's an anti-dumping opportunity, we will definitely consider, but we will not take a product decision based on that scheme.
Sure, understood. Thank you.
Thank you. The next question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity, sir. So just two questions. One, what is the planned capex for say this year and next year, or total capex which is being planned for next 2 years?
This we had said last time that around this year is around 400 crores. Part of that is already implemented or combined. I'm talking on consolidated basis. Okay, next year it will certainly be bigger because of Deepak Cleantech, what we have done, and we are coming out with. So next year capex are certainly higher than what you are seeing this year. I will give you the numbers and this when we make the announcement, but you can take it. It will be certainly higher and significantly higher as compared to current year.
Sure. Just second question, sir, again on the fine and specialty chemicals. Two parts to it. Mr. Upadhyay, you mentioned about margins to be sustained in the range of 40-44%. I hope you are talking about the EBIT margins in that. And secondly to that, sir, in fine and specialty chemical business for last 8 to 10 quarters, generally our sales has been around 140-150 crores. On an average, it has been around 150 crores for last 8 to 10 quarters, except this current quarter where we have reached almost 200 plus 210 crores of top line. So, Maulik bhai, is this 200 crores to 200, should we now take it as a base figure, so-called top line for this particular division on a yearly basis, like?
Yes, I can answer this. The margin is EBITDA and not EBIT, number one, to answer your question. Number two, yes, the growth, whatever you are seeing in fine and specialty, the turnover and this, you will see the same. It's a sustainable growth.
Okay. So, mota 200-210 crore का अभी turnover base हो गया है, and from here on we can have some growth as we go ahead in next 12 to 15 months.
Yes.
So there will be brownfield and greenfield growth in the business unit, and hopefully you will see the value of that coming in. But yes, this can be something that is looked at as a regular situation, barring unforeseen circumstances.
Sure. So just one more thing. Whenever we talk about introduction.
Sorry to interrupt. We'll have to move on to the next question, please.
Thank you.
Thank you.
Sure.
Thank you.
The next question is from the line of Ankit Gaur from Systematics. Please go ahead.
Yeah, hi. Thank you, guys. Great set of numbers.
Yeah, thank you.
So my question with regards to FCS division. Maulik Bhai said we have significantly made some investments in last few years. If you can quantify in last 2-3 years what sort of investments we have made in FCS division, and related to that question, what is the export portion in this division? If you can answer. I have a next question, but if you can answer first, thanks. Hello.
This is the operator. The line for management has got disconnected. Please wait while we reconnect. This is the operator. We have the line for management connected now.
Yeah, hi. Do you want me to repeat my question, guys?
Yes, please.
Yeah. So, as Maulik Bhai mentioned earlier, that we have made significant investments in finance specialty. Would you mind, sharing that number in last 3-4 years, how much investments we have made? And related to that, what is the export portion in FCS division?
So first of all, I did not comment on the investment being made only on finance specialty.
Okay.
The investment has been made across the business units.
Yeah.
And I would say that I think if you are asking specifically about finance specialty, our domestic to export ratio has by and large remained the same, I think in the last 1 year or 2 years. Domestic customers are also strategic customers. They may be exporting or they may be using it for Indian consumption. A large number of these are into the agro space or the pharma space. And when they're looking at us as equal opportunity to whether material comes from Europe or China or anywhere. So they're strategic customers nonetheless. If you're asking about the ratio, it has not changed.
So export this year it has gone up. Overall, if you overall if you see it is 50%, 51% in the first half as compared to earlier, because this is also because now if you see the results, we are talking more about the finance specialty, but bulk chemical, because of the impact of corona on this, there was a lower turnover in that. Now nobody has asked me, so I am wondering.
Okay.
But that's the fact that because we have always mentioned that PP. See, if you see the overall numbers, it is a good set of numbers. Overall our business is such that it gives us that edge. Some business is not doing well, some business is doing well, and overall the performance is good and always good.
Yeah.
So bulk chemical, if you see the turnover is lower, which is domestic. And this is lower because certain segments are not doing well, like the petro products. It is in performance. If you see the textiles and paper are yet to take up. So those things you will see the revival in the Q3 onwards. That's what we believe. Q2 had an impact of that. So with this, the ratio will again 50% will go down to say 40-45% or maybe 45% export. So by and large, you can take that the export to domestic ratio would remain in the range of 45 to say around 40 to 45%.
Right. In my question related to FCS only, as you mentioned, there are some strategic customers. So intermediate what we supply, are we the top 3 or the only supplier to our customers? And related to that, have you seen the trend of domestic companies taking supplies of intermediates from Indian companies like Deepak, and earlier they were taking supplies from Chinese companies?
Yes, there has been a shift, definitely. And I will say that the shift has been, now whether we are number one, number two, number three, or only one, or whatever, definitely we are a preferred supplier to many of these companies. And I will say that yes, there has definitely been a shift in looking at Deepak more as a strategic supplier rather than a tactical supplier. So therefore, we are also able to give that sense of long-term confidence.
Okay. See, like you asked about the finance specialty capex, to Maulik. Of course, he was not mentioning finance specialty alone, but the point is that there also we have expanded the capacity, and these are all brownfield expansion. It's not a greenfield something we have done, but the higher margin products or better products where the customer wants us to supply more, we have expanded capacity, and because of that, you are seeing these numbers. So when we talk of operational efficiency, it's a mix of operational efficiency plus the higher margin products we have debottlenecked and supplying the higher volumes too.
Okay. And sir, on a consolidated basis, there is a solid OPM expansion.
Sorry to interrupt, so we'll have to move to the next question, please.
Sure.
Thank you. The next question is from the line of Abhijit Akela from ISL. Please go ahead.
Hi, good afternoon, gentlemen. Thank you so much for taking my questions, and congratulations on a very good set of numbers.
Thank you.
Thank you.
My first question is actually regarding the social distancing norms that you had alluded to, which have kind of depressed capacity utilization at our facilities. So, could you please elaborate a little bit on that exactly? What kind of practices have we put in place, how those have impacted utilization, and how you see the future? Can these be reversed at some point, or is this something we need to live with, for the long term?
I wish that I had a longer time to answer these questions. Perhaps, we can send out some sort of a note on what we do in the future. But what we have done is a mixture of physical changes and digital changes. There's been a lot of training. There has been social distancing has affected us in areas where there is constraint, whether it is in terms of packing, whether it is in terms of process plants which are tightly set up together. And in all of these, what we have done is not only have we maintained that whatever PPE etc. is required, we get regular tests done for all of our employees, whether they are and contract and on-roll employees at plants, in offices, everywhere. And along with that, we also maintain the social distancing regulations, PPE regulations that are government mandated. We go a couple of steps beyond, impart training not only to the workers, also outside to family members. We definitely take it as our moral and corporate responsibility to ensure that whoever is coming in, that the company, the plants, do not become virus vectors for healthy employees. So, as the virus waxes and wanes, we will have to keep this in mind when taking positions with regards to capacity utilization, because health of the employee is the number one concern. Margin maximization and production maximization are never going to be more important than the health and safety of the people who are with us. So tomorrow, if the government comes in with mandates that we have to go back to the kind of draconian system that was there in June and July, we will do it very happily, because it maintains the safety and integrity of our workforce.
Abhijit, to add to what Maulik just said, that in fact, to do this, we had really tested our strength, and this, if we have to run this plant with 25% of employees, 30% of employees, are we able to run the plant? And we have that also, we demonstrated we can do it, shifting the people, key people from one plant to another, making them more skillful in operating some other plants. Those all efforts are parallel, so that such situation may come. I mean, there could be again a wave of corona and this, and again something can happen. So we are fully prepared. If we have got an in-house doctor who is available 24/7, to the people anytime, and people are regularly they are getting tested and the reports are sent. So I mean, this is a part of our culture. We take care of people, and and then you also know that we operate in various parts of the countries. It's not only Gujarat, but at each and every location this is being practiced. You know, Hyderabad, where situation was really bad, even Roha, Maharashtra, where it was bad, Taloja. But still we saw that maintaining the social distancing, maintaining the safety of the people, we ran the plant.
Got it. That's really helpful. And my second question was just with regard to the press release talks about some new brownfield projects that are going to be commissioned in 3Q. So any details you could share about those? Which segments are these coming up in? And it's also mentioned that profitability will improve because of these projects. So which segment should we expect these, and what is the quantum of the investment that's coming up for commissioning? Thank you so much.
So this brownfield is in finance specialty, part of that, and a basic chemical. Okay, the investment would be in the range of 70 crores roughly.
Okay, 70 crores across both the segments.
Yeah.
Okay. Thank you so much, sir. Wish you all the best for the future.
Yeah.
Thank you. Due to time constraints.
Hello.
Hello.
Right. Due to time constraint, I would now like to hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Yeah, thank you all for joining this Deepak Nitrite call. In case any further clarifications or any questions you have, you can get in touch with Mr. Nanda or our investment relationship team, and they will be very pleased to reply to your queries. Thank you so much.
Thank you. Please stay safe, and wishing everybody a happy Diwali, prosperous New Year.
Thank you very much. On behalf of Deepak Nitrite Limited, we conclude this conference. Thank you for joining us, and you may now disconnect your lines.